Let's talk with Sean Wood, associate broker for NAI Outdoor Hospitality Brokerage, which focuses on glamping resorts, RV parks, and campgrounds. I'm Alex Burke, and this is the Outdoor Alliances podcast. In today's episode, we're going to talk with Sean about the current state of the real estate market, how interest rates are affecting the economy, and much more. Sean, thanks for being here.
Thanks for having me, Alex.
Why don't we start with just a little introduction on how you entered the industry and got started with NAI?
Yeah, most definitely. Um, a handful of years ago, I finished my service with the Army, graduated college, and I spent a couple years in the residential real estate world. And then I joined Bob's team back in early 2020.
Yeah, that's great. And so where are you guys based out of? Where's your headquarters at?
Yeah, we are headquartered out of Basalt, Colorado, which is near Aspen, but we all live in all around Colorado and the Denver metro.
Yeah, that's a lot better weather than I think here in Indiana. It's nice to see the mountains and see some cool stuff there. And are you guys a full service brokerage firm that works with people, across the country, or do you focus mainly on the, western portion of the U.S.?
Yeah, so we we focus on nationally with RV parks and outdoor hospitality. I focus primarily on the southeast part of the country.
Okay. And why don't we start maybe for people who, don't know much about how the real estate market is going, just give me a business update of, how's the company going? What are you seeing as far as trends in the industry and things sort of coming your way?
Yeah, most definitely. As far as our business is concerned, it's going very well. We actually recently brought on a new broker, Maria, who's focusing on the northeast part of the country. So we're continuing to grow, bringing on new brokers to expand the markets that we're working. And as far as what we're seeing, as far as growth in the RV industry, it's still off the charts. It's still very strong.
And so it might be helpful for people to maybe piece this from both sides of the industry, whether you're looking at buying a park or selling a park. And I know it's a different frame of mindset and things that go into that process, based on what side you're on. So why don't we start with maybe a typical buyer? What are some things that they might look for in a park location? And where are you seeing people really focus on and saying, it's got to meet these boxes and these things for me to be able to consider purchasing this park and for me to actually, consider investing in the industry?
Yeah, totally. Our typical buyers, I mean, they do range in all different sizes. They are mostly investors. So there's a handful of REITs out there, which are very large buyers. And then all the way down to smaller syndicators that, piece money together from different investors to go and buy a property. And with that being said, that does allow for almost any size of property to be of interest to one group or another. The bigger buyers, they're looking for your really large Class A RV resorts, and on the beach or right at the entrance of a national park or something like that. Where some of the smaller groups are more looking for, again, the draws. The location is always very important. If you're near a national forest, national park, near a body of water, anything like that, those are draws. But we definitely see two ends of that spectrum of size of buyers.
And I know you just mentioned locations. Is there a particular region or part of the country where you see a lot of focus on capital moving and where people might consider investing in a park? I know, like I mentioned, being here in Indiana, the winter season sort of limits the operating time that a potential park, in the northern part of the country might have versus out west or in the south where they might be able to operate year round. Has that been a factor, and where have you maybe seen that capital distribution fall?
Yeah. Again, I focus primarily on the southeast part of the country. People that I'm dealing with on a day-to-day basis, um, that's where a lot of money is going. But again, we have Maria in the northeast and Bob, who works the Mountain West states, that have to deal more with the shorter seasons. But people are still interested in those properties as well because if you can get the same amount of cash flow in 6 months as you can 12 months, the numbers still work out. So we're really seeing money come into the RV parks on a national level. It just really is more dependent on where people are comfortable owning property. They're close to home or they're comfortable with.
And I know one of the terms that you had just brought up was a REIT. Maybe people don't know what that is. And can you maybe just quickly explain that? And then a follow up to that, are REITs interested in buying a park that might not be complete, meaning that there's still room for expansion, still room to grow? They might come in and add amenities or things like
Mhm.
that. I mean, when you're talking about coming from a buyer standpoint, are people interested in picking a fixer upper per se as a
Mhm.
park that they can do a project with?
Yeah, so a REIT is a real estate investment trust. Traditionally, they are public domains that go out and buy real estate. There's a handful of big ones that are focusing primarily on RV park and mobile home. They kind of combine the two into these REITs. And so those parks and those groups in particular really are looking for the really nice high-end properties. If there's room to expand and add more sites, that is of interest to them, but they are looking for, the cream of the crop. They're looking for the top 1% of RV parks out there. Where some of the other groups, some of the smaller groups, are definitely interested in kind of your fixer-upper type RV park, come in, spruce up the amenities, add some more sites, things like that. Yes.
And I know one of the things that I have heard over the last couple of years, as we've sort of gotten out of COVID, was that it was more of a seller's market and more advantageous
Mhm.
to potentially put your park on the market. Has that changed, and is it a good time if you're a buyer who maybe has capital to decide to purchase a park? And what
Mhm.
sort of maybe has changed from when we were living in COVID to now as we're in 2023?
Yeah. So really in real estate, all over the map. So all different types of asset classes, residential real estate. Since COVID, we were in a very heavy sellers market where they controlled everything. Where now we're kind of seeing that shift back to more somewhere in the middle, where not necessarily the sellers have all the control, but the buyers don't have all the control either. So it's probably a little bit healthier for the market in the long run of transacting on real estate as a whole, but primarily these parks. So yes, if you are looking to buy your first property, this is a great time to jump in and do it. You have a little bit more say, you have a little bit more control of what you are wanting in that transaction. But if you're a seller, it's still a great time to sell. You're still able to get a very fair and strong price for your property.
And why don't we switch gears here then? That's a good transition to
Mhm.
talk about what it's like, maybe through the selling process. What are things that you would recommend that owners do to prepare their park to sell? I know I've talked to people before, and there's a maybe a long list of things, or a short list potentially, depending
Mhm.
on where the owner's at, from financials to everything else. Can you just briefly talk about that process if somebody's looking to sell?
Yeah, most definitely. So the number one thing that we're looking at when evaluating a property is the cash flow that the park is generating. Location is again always important in real estate, but cash flow is number one. So the biggest thing is having your books and records as clean as possible. So there's less tinkering that has to be done, or less kind of that he said, she said of what's going on the financials. That's the number one thing that sellers just need to be focused on when getting ready to sell. Besides that, almost anything else can be worked with as far as uh, like projects that aren't completed yet or anything like that. Those are things that can be worked with as long as the financials on the property are clean. Um, it should be fine.
And maybe this varies a lot from park to park and location to location, but what's sort of the multiple or the value right now that a seller might
Mhm.
be able to get on on the sale of their asset in their park?
Yeah, so we use, and the industry is starting to turn more into using this multiplier. It's called a cap rate, a capitalization rate. Right now, it's tough just to give one number for these RV parks because it varies so much from size of property to type of property to location of property. But I'd say now you can look anywhere from probably an 8 cap to a 10 cap on your net income.
Okay. And why don't we change gears and maybe talk a little bit more about something that's been on a lot of people's minds lately, and that's really how interest rates have begun to affect the economy. And I'm sure you get questions about this as well because it's, supposed to help with cooling down the economy and changing how different markets and industries are forming. So,
Hmm.
how have interest rates affected the camping industry specifically? I
Hmm.
mean, maybe do you see things slowing down even just a little bit
Hmm.
as rates continue to rise?
Yeah, so interest rates have definitely slowed the RV markets down a little bit. It's similar to what you can probably see in even your residential market in your own neighborhoods of, your neighbor put their house up and it sold over the weekend for way more than it was listed for. We're seeing the same thing in the RV market as well. This market was never quite that hot where we would list a property, we'd get 10 offers over the weekend and be under contract on a Tuesday if we listed on a Thursday kind of thing. But it was much faster than what we're seeing now. But it still isn't taking an extreme amount of time. Again, I think what we're seeing is a healthy shift in the market where things are taking a little bit longer. People are doing more due diligence on upfront instead of just getting properties under contract and then doing their due diligence after they have the property under contract. So things are slowing down, but again, it's very healthy what we're seeing in the market right now.
Yeah, so it sounds like people are maybe slowing down their decision-making process. Ultimately,
Hmm.
parks are still selling at a
Hmm.
decent rate, but maybe that the decision-making prior to purchase is changing some.
Yes, definitely.
And do you think that I know the Federal Reserve continues potentially to raise rates further? Do you think that that's
Hmm.
going to have a furthered impact on slowing the market? And I know this is projection. If we all had a crystal
Right,
ball, we wouldn't be doing what we're doing, and we'd be
right,
rich somewhere else. But
right.
what are your thoughts on continued rate increases, even more than what we're seeing
Yeah.
currently?
Yeah, so it really depends on what the Fed decides to do. If we get hit with another massive increase, we could be having a very different conversation about how 2023 shapes up. Everything that I'm kind of hearing is pushing us to, half a point, quarter of a point increase, which I think will help us kind of stay in the status quo, a new normal that we've kind of entered into. So it really, we don't know yet, but things are starting to kind of get back into a rhythm, and we're seeing again a new norm kind of start to form. And so as long as it's not too aggressive, I believe we'll stay there for the remainder of the year.
Yeah, and that was actually going to be my next question: is when that new normal
Yeah.
was going to come. Whether you think it'll be now in 2023 or early
Mhm.
2024. I know that again that's a projection out, and maybe that will
Mhm.
weigh some people's decision factors on whether to buy or sell, depending on when they think that market will shift back to a normal state.
Yeah, definitely. And one of the things that's interesting about this asset class is that it is a very old business. People have owned campgrounds for forever, for a very, very long time. But this new way of looking at a campground as a real estate asset and really having a lot of these big groups buying properties and running them as again real estate businesses instead of just small businesses. I think we're still just trying to find a normal in that because COVID lit everything on fire. It was so exciting. Campground owners were making more than they ever had. They were selling these campgrounds were selling for more than they ever had. So I think we've been kind of trying to find a normal in this asset class for a while. Hopefully as things kind of start to calm down with interest rates and everything like that, we'll really fall into a normal. But I think this is we're very close to that, where again we have it's not a very strong or an overly strong seller's market or buyer's market. We kind of are floating there in the middle.
And Sean, how do you see maybe potential capital coming and entering the space? I know that you've
Yeah.
talked a lot about the how REITs are continuing to invest. Are there still even
Mhm.
opportunities for mom and pop owners who might be saying, I've thought about this for a while. I
Mhm.
might look to buy a mom and pop park from somebody who's owned it for a while and let us take over. Is there still
Mhm.
opportunities for small, I should say, small capital buyers to really enter the market and make their
Mhm.
mark?
There's always opportunities for that. They're going to be smaller at like smaller properties than what these REITs are looking after. I mean, it's apples to oranges almost of what these properties look like at the end of the day. So there definitely is room for that as far as investment capital coming in. We're seeing more and more of that. We get phone calls all the time from groups looking to enter this asset class and with questions. And the big reason that I think we're going to continue to see that is right now you can, if you go out and want to go buy multifamily, go buy an apartment complex, you're going to be looking at, a five cap, 5 to 6 cap. Where in the RV world, again, like I was saying, we're looking at an 8 to a 10 cap. And hotels are very similar to that on the apartment side, a little bit higher, but still lower than where outdoor hospitality as a whole is trading. And so that's where a lot of this new capital is coming from. They're seeing the opportunity, and because of that, I do believe that there's still opportunity for smaller capital groups to come in and buy these properties.
And what are sort of the kinds of properties that you're seeing come available on the market? I
Mm-hmm.
know you talked a lot about, and I've been hearing a lot about the rise of glamping and those
Mm-hmm.
properties becoming, widely sought after as a new
Mm-hmm.
younger group of consumers comes into the market and wants that to be their place to camp and go on vacation and spend
Mm-hmm.
time with their family. Are you seeing glamping continue to rise from the real estate standpoint? And what are those types of properties that you're really seeing be pushed to market?
Yeah, so those are kind of two different questions. So I'm going to start with
Yep.
what properties we're seeing come to market now. It does tie into the glamping, but there's kind of two ends of the spectrums of an RV park. You have your affordable housing on one end, or long term, people are staying for a couple months at a time for whatever reason, all the way to your high end resorts where people are staying for a night or two, and it's an all inclusive resort kind of situation, and then everything in the middle. So as far as the RV parks are concerned, we really are seeing everything on that spectrum buy and sell, because there's some groups that are really interested in your very transient, stay a couple nights, rolling through new tenants all the time, more hotel without wall style RV park. And then there's also larger groups that are very interested in your more long-term affordable housing, second home, seasonal type properties, on this end of the spectrum. So it really does, as far as what is trading and what people are interested in buying, any of those, any park that kind of fits in those models, there is someone that's interested in buying that kind of property. As far as the glamping is concerned, we're seeing more and more property to be developed into glamping is what's currently being transacted on.
So
Um,
buying land with the
Buying
intent of
land
making
that's
it.
been
Okay.
exactly buying land that's been entitled or has some plans already, ready to go. That's what we're seeing transact on. We haven't really seen a ton of glamping resorts hit the market yet. That'll be very interesting to see in the next couple of years when those projects start finishing, and investors are ready to kind of cash out and move on to the next thing. How those will affect the market.
Right. And I think it's really unique not building those RV sites. It's more treated
Mhm.
like, mini little lodging units and hotels,
Mhm.
maybe
It is.
almost like an apartment might be where you're buying just the number of units plus the
Yes.
amenities and what they have there. So you're right that might affect things
Hmm.
as that market matures and as more glamping properties begin to come
Hmm.
online.
Definitely.
And one last question before we wrap up that I wanted to ask you was, I know you mentioned this earlier, the sort of the difference between the campground and RV park market, and then the mobile home or manufactured housing market, and how that
Hmm.
differs. What's sort of the main difference that you're seeing currently between the two, and maybe
Hmm.
where is there more of an opportunity for either on the buying or selling side?
Yeah. So again, it really goes back to who's wanting to buy these properties. So mobile homes, similar to what we were talking about before with like multifamily, their cap rates are significantly lower than outdoor hospitality is currently. And so those buyers that are coming into the outdoor hospitality world are very interested in the more long stay RV parks because it's more what they know. They're very similar structures at the end of the day. Where we have your groups that are used to hotels coming in, who love the more transient side. So the opportunity really comes from each park individually. Each park kind of tells their own story, and kind of shows where the opportunity comes from. So it could just be, you know, it's been a family ran park for 20 years and they're just not as up to date online, for example. And so they don't allow you to book online. That could be a huge opportunity for a new buyer to come in and just clean up the website and allow people to book online.
I've done this as well, right? It's
Yeah.
sort of like the marketing sucks and minor
Yep.
changes can have that big impact. So I
Yeah.
completely understand that.
And then on the other side, it can be, just for example, it's a 100 space park that has room to add another 100 sites to it, which is obviously significantly more capital intensive, but doubles the size of the property and therefore makes the property worth significantly more than when you bought it.
And then Sean, I'll just give you a chance to wrap up and give your
Mhm.
final thoughts on maybe the state of the market and what sort of your mind's at and where your focus is as we head into 2023.
Mhm. Yeah. Really, we don't know what's all going to happen in 2023, but we believe and um, try to put this out into the market that things are still going well. We're out, talking with buyers and sellers every day, and we're meeting in the middle where people are having to change their mindset a little bit, but we're still getting very fair, good prices for our sellers and for our buyers. And so we will see where 2023 takes us, but we believe that it's going to continue to be a strong um, market in the outdoor hospitality world.
And I know one of the shows I just saw you at was the Carvick show down in Myrtle Beach. Are you
Yes.
going to be attending any other shows that you know of as we get into this next year?
Yeah, so Maria is going to be at the big show in Massachusetts next month. I know
Yep.
Jesse's going to be at Taco here in the next 2 months or so. We will be at the glamping um, out here in Colorado, and then the whole team will be at Arvik again. Those are the ones I know off the top of my head that will have attendance at.
I know it's I put you on the spot there. I don't even know
Yeah.
where we're traveling as well. It's sort of
Right.
hard to plan in advance and you're not thinking that far out.
Yeah.
And then how can people get a hold of either you or the brokerage if
Yeah.
somebody is interested and wants to reach out?
Yeah, the easiest way is just to go onto our website, which is naiohb.com. There's all of our contact information is there. If you are interested in the Southeast, feel free to reach out to me, which my phone number is 303-881-5751. Or you could shoot me an email at Sean Wood, SEAN Wood, WOOD, at naiohb.com with any questions. And then to find out the rest of the group's contact information, our website would be the best bet.
And for all the listeners, the website will be linked below. So if you want to go ahead and click that and get in contact with Sean and their team, you can feel free to do that. Sean, thanks for being here.
Great. No, thank you, Alex. It was great.
Thanks for listening to the Outdoor Alliances podcast. I hope you enjoyed today's episode. Please subscribe on Apple Podcasts, Spotify, wherever you get your podcast, and join me back here every Monday and Friday for more episodes. I'll talk to you soon.